Good morning. Today is Friday and January 20th. The time right now in Singapore is 11 o'clock in the morning exactly. And overnight on Wall Street, we see that there's hardly any movements. The market has no motivation to go either way, but basically the market was drifting and there was it just continued to trade lower for this week. So up to now, we are into the last trading week of the week, and I think this is where it's get very interesting because if today ends week and we have the entire weekly bar end up near the bottom of the trading range of the week, then I think it's setting the stage for further losses going into the new week next week. And this is where the danger lies because I have this idea going into January 23rd, we are going to a highly dangerous period because there is a risk that the market may have a very big movement. Not sure what will the catalyst be if there's going to be one, but I do expect some kind of volatility to pick up on Monday on January 23rd. So today's closing will be very crucial for me. And if it close on a weak note, it's setting the stage for further losses into the new week. Okay, so do watch out because this rally attempt has practically, I think, failed. We can see on the Dow Jones itself, the highest traded this month was 34,342. This is nowhere near the December high of 43,712. So we are a good 400, maybe near to 400 points away from challenging the last month high, and that set the stage for a possible pullback in at least in if you're very optimistic about the counter trend rally from October low of 28,660, then this pullback, if there's going to be one, even if we take out the December low at 32,573, may actually hold at the 32,200 levels, okay? Because if this will be a simple pullback, then it still have a chance to actually rally. So we will have to see how far this expected pullback will gun for. Okay, so one area to consider will be the November low at 31,727. So do watch out for a possibility market take out the December low and then go and challenge the November low at 31,727. And if this is just a simple three-way pullback, there is still hope the market can eventually rally. Somewhere in I think in April or May, I think we may see a reversal in equity markets, but for time being, because we are only in the first month of 2023, everything is still up in the air. And I still believe that going forward, we could possibly see a more severe pullback, okay, more than a simple three-wave pullback, okay. So this is setting the stage for in what I would believe to be quite an interesting month and closing, okay. Over in the S&P 500, we also see the quite similar pattern. The high traded this month so far is 4,015.339, nowhere near the December high of 4,100. So this again setting the stage for something very similar like what you saw on Dow Jones, that if we are optimistic about the medium to long-term outlook for US equity basis the S&P 500, then the market may actually be going down to test the 3,675 levels and very, very close to this crucial level of 3,647.42. Because if this level is taken out, then as far as I'm concerned, the rebound is over and the market is getting ready for further losses below the last year low of 3,491. So this is my medium term outlook. So if the market take out this 3,647.42, to me that is a invalidation point, and that means the market for me is going down. Okay. Over in the Nasdaq 100, this is the weakest of all the major equity index in the States, and purely because the tech stock has been under defense and most of the tech stocks has not done very well for the whole of 2022, despite a 2 months rally. Okay, so this 2 months rally for the time being doesn't look like it will be challenged anytime soon. The highest traded this month so far is at 11,660, okay, and the December high is at 12,166. We are quite far away from those levels. There is really no danger of the market challenging the December high, short of something not expected. Okay, so if the market is allowed to drift, I think it will continue to drift lower. And if the market take out 10,632.2, then of course very similar to the S&P 500, I would deem the rebound from the last October low at 10,440 to be over, and the market is resuming its larger degree downtrend. Okay, and that will set the stage for further losses going into maybe February and March. Okay. Over in Hong Kong, we can see the market there is actually holding pretty well. It has not taken out the high at 21,947.5 so far, but you can see that the market is definitely wanting to try. If the market can do that, I think the immediate target is 22,118. And if that level is also taken out, then of course, I think the next logical target will be the last June high at 22,449. So this is putting up to be a very different scenario for equity markets in China/Hong Kong. So in China/Hong Kong, we are saying maybe we call it Greater China, does looks to be a lot firmer, and it has a different dynamics going into 2023. It does look like this counter trend rally for October may actually persist for a little while longer. To see evidence of this, let's look at the Shanghai Composite Index. This morning, from the get-go, the market actually traded to a high of 3,262, and this is the highest so far this year, and it actually is the highest since the low that was traded in October last year at 2,885. So this is likely to be unfolding as a larger degree three wave. And if that's the case, based on magnitude, okay, based on equality levels, there is a very good potential that it may actually eliminate what we call the upside target. Okay, if this is the case, then there's a case for the market to go up to 3,375, which means that it would have taken out the August high of 3,308.35, and that to me will turn this market seriously to the very bullish. Okay, so we will have to see how this market react as it goes ahead and challenge the last August highs of 3,308.35. Okay, because this to me cannot be taken out, because if it's taken out, then the market will turn bullish. The entire bearish outlook that we saw since July last year, okay, is practically over by then. Okay, so we have to watch this market because it has the potential to do an equality move at the bare minimum to challenge 3,375. Okay, now over the Nikkei, we don't see the same bullishness. In fact, the Nikkei looks pretty weak to me. All the while we can see lower highs. Okay, and so far we have not had lower low, and this could be building up for a case for a lower low below the month low at 25,630, and then possibly to take out the 25,621, which we saw last October. So this is building up to be a case in which I think the market is biased to the downside more than to the upside, because so far the rebound from the beginning of the year low at 25,630 looks like it's a simple three wave. And if it's a simple three wave and the market reverse from there, it does not look good for the bullish case. Okay, and over in the S&P 500, over in the FX market, we can see that the dollar is basically treading water after a volatile session from 127.21 all the way to 131.57. The market short position has basically been shaken out on the market, because as the market was going down, market was expecting the BOJ, which is the Bank of Japan, to do something about maybe canceling their negative interest rate policy. That did not happen. They stand pat, meaning to say that they did not do anything extraordinary. So the market was disappointed. So all these short positions have to be unwound, and the market actually have a massive short squeeze going up to 131.57. But since then, the market has come back to where it was before the announcement of the BOJ interest rate decision. So the market right now is a little bit, how should I say, there is no incentive for the market to go either way. So that gives me the idea that perhaps the dollar may have hit a temporary bottom. And if this is the case, then maybe we can see a higher dollar rate relative to the other major currencies. So do watch out for this potential move here. This is just an idea that has built up this week because of the inability to trade even lower than 127, the 127 handle. Okay, over in euro dollar, because of my of my change in view, at least for the near term for the dollar, which I believe the dollar may have already bottomed. So the high traded in the euro versus the dollar at 108.87 could be the top this round. Okay, so if that's the case, then of course we are looking at lower rates going forward. Do remember that euro dollar has been trading within this rising channel, and critically it is trading below the midpoint. So that gives this market, although it is up, it does have a little bit of a negative bias for the downside. So I want to see if this pans out, and if the market takes out the rising channel like what it did in the sterling, then I think something else could be cooking. Okay, we may be seeing potentially lower rates going forward. Okay, Over in the Aussie versus the dollar, we can see Aussie this round managed to go up to 0.7063 before it pulls back. Now, going into this week, I've been mentioning the possibility market trying to test the 0.6860, okay, and low traded yesterday was 0.6874. So it's pretty close, but I do think that maybe it will come back again and test one more round. Okay, by and large, you can see that this market is rising. So the momentum seems to suggest that this market is still having some bullish bias to the upside, but we have to see how it performs as the market decide which way you want to go, because this pullback here is a bit severe, because on the 4-hour time frame, this is an outside bar, which is a very bearish development, and the market has not been able to recover significantly after the appearance of this high here as 0.7063. So we will have to see how market. I am more biased to the downside now, at least for the near term. So do watch out for any kind of rebound. If we see a rebound that cannot go significantly beyond the 50% mark, then I think it is setting the stage for lower rates going forward. Okay, this 50% mark is currently at 0.6968. Okay, so do watch out for 0.6968 as the market try to go higher. Okay, if this unfolds as a 3-wave, I think the conclusion is quite clear to me. Once I see a reversal signal near this kind of Fibonacci levels, it don't have to be 50%, it can be 61.8%, then it's still good for me to sell. Okay. The one that I am more convinced that it will go down is actually the Kiwi market. I have yet to share with you my view of Kiwi dollar. Okay, Kiwi versus dollar have a new development over the last 48 hours. There was a sudden unexpected news that the current Prime Minister of New Zealand has actually announced that she's stepping down no more than February the 3rd or the 4th, which is like 2 weeks from now, she's going to step down. This is totally unexpected because going into 2022, she was going strong. Okay, everything about the media talking about her, and she's always in the limelight. And for her to announce that she's running on empty, okay, it's exactly what her word is, and she felt it's time to step down. Okay, and she did not offer more reason beyond the fact that she's tired. Okay, she has given her best, and this is all she has. And it's best to let somebody else run the show now. So this is causing a negative bias in these Kiwi dollars. Okay, for somebody who have, at least based on mainstream media, has been painting her to be a very efficient prime minister, and for her to suddenly step down out of the blue, that could actually shake investor confidence. So this is definitely working out to be negative for this currency pair. Okay, so if the market can rebound, because so far the market low was 0.6365, the market can rebound back 50% at 0.6440, okay, or 45, then I think we want to see how the market reacts around this area here. If the market can actually fails to sustain beyond this level and start to reverse, then I think we can start take up a short position, at least for the near term, for further losses in this Kiwi. Okay. Over in dollar versus Canadian, we can see that the dollar rate has actually surged to 135.20. This is a very strong surge, and though the market pulls back yesterday, the 50% mark is at 1.3435. Okay, if the market does stabilize here and started to reverse, then maybe we can engage this market on the long side. This is very, very much in congruence with my idea that dollar may have already bottomed, but again, this is just my perception. Okay, we always have to see how things turn out. Over in energy markets, we can see that the crude oil has been struggling ever since it hit $82.66. When was it? Was on Thursday, which is yesterday. The market actually went up to $78.45 before rebounding back more than 70%. So right now the high so far since the rebound is at $81.49. Would it go up? I think it has the ability to go further. Okay, but we have to see, because the market after this sharp fall, because you see from $82.66 on the 4-hour time frame, this is again something very similar to what we saw in the dollar rates. This is an outside bar, which is a very bearish development. The Japanese call this the what call it? Yeah, I can't remember the term. So anyway, this is a very technically bearish development, and there is this every possibility market may extend lower. And if so, then we will want to see how the market reacts at $77.28 to $76.14, because this is the equality move level. So we have to see how market reacts from here. But by and large, I'm pretty optimistic about crude oil prices, especially with China reopening. I think the market is really underpinned by the fact that China is now back in the game. Okay. And over in gold market, we can see gold has been relentless. This market has been charging new high practically every week. And now the current high this morning is at $1,935.25. Does not look like you want to pull back significantly. So at this current rate, I'm definitely not interested to buy, but I could live to regret this move, okay, because I have no position. And in the ideal setup, I would like to see some kind of decent pullback, but it doesn't look possible at this moment in time. Of course, once dollar start to rally, if I'm right, then we may get our chance. Right now, the dollar is very tentative, not sure which way you want to go, especially for dollar yen. So we really have to take the cue from dollar, okay? Over in silver, we can see the pullback has been very narrow. We can see that there is already a structure in place. We have a bottom at $23.10 and a top side at $24.55. So between these two extreme prices, the market is likely to, to be consolidating until it finds what you want to do. But I think the bias is still to the upside. So if you want to trade the range, you just know that the range is between $23.10 to $24.55. So this range is actually quite tradable. But try not to short this thing, because I think the risk of being stopped out in energy in precious metal market is actually pretty high, because the underlying tone is actually quite bullish. So if you can, try to buy rather than to trade on the short side of this very obvious trading range. Okay, be very careful. Over in crypto, the rally that we saw, this mysterious rally that we saw at the beginning of this year, has hit a high of 21,650 there about in Bitcoin, and since then the market has actually pulled back. So this pullback here may just be a temporary technical pullback. Okay, we do not have anything to suggest otherwise. So if this is the case, so far the market has pulled back 61.8%. We have a high today this morning at $21,213.29. And what happened is, very interestingly, we can see double doji here. If this market ends on, this is a 4 hours time frame, by the way. If this market ends as a double doji, that means the market is undecided which way to go. It can either go up or it can either come down. So it will be very interesting. So what happens next if the market decided to go up? It must take out 21,650 very convincingly. Likewise, if the market decided to come down, it must take out 20,400 at a minimum. And if that's the case, then it's setting up for a three-wave pullback to perhaps test the 20,000 levels. Okay, so depending on where you want to go at this current price, it is really unknown until we see some kind of confirmation from the current 4 hours time frame candle bar. Okay, over in Ethereum, we saw something very similar. Although not quite the same, but we also have a high here, which likely to be ending up with a double doji. Okay, double doji means the market is undecided, neither here nor there, and the market has pulled back 61.8% at 1,563 and 80 cents. So again, we have to see how the market want to react. But based on the high here, 1,608.80 cents, this bar here, the closest, it is a negative development. Okay, because this is an outside bar, and it is definitely not something that you want to see in the bull market. So this could signify either a peak or some kind of impending correction. Okay, so if this is just a simple correction, and if the high here at 1,563.80 cents managed to hold out, then maybe the market will pull back to $1,454.70. So do watch out for this move here. Okay, over in Cardano. Cardano does looks like a very simple three-way pullback. This is actually quite a firm market. You can see the rally from 0.238 all the way to 0.370 is actually quite robust, and the pullback is very shallow. And we can see the market, I have a three-way pullback target at 0.322 to 0.332. Okay, and the market actually came to win this bracket of prices with a low at 0.325, and the market managed to rebound from here. So again, this is just a simple three-wave, and ideally, if this is the case, and if we can build a case for this, then we can draw a simple resistance line here, and the market can convincingly close above this line here. That is setting the stage for a challenge of this high here at 0.37, and it must take out 0.37 on a close to close basis. So it does looks bullish to me. Okay, but if this end up to be something more than just a simple three-way pullback, then it become a more complex corrective pattern potential. So we will have to see how this all works out. Okay, for a market to want to go extend higher, it must take out 0.370. Okay, On the Solana, this is even more bullish. From the low of just under $8 to a high of $25, this market has been very, very bullish. And the fact that you only pull back 23.6%, okay, at $20.40, this is very, very shallow technically, meaning to say the underlying bias is actually very, very firm. Because typically when the market retraces, it will either retrace at the bare minimum 38.2%, if not 50%, which is very common. But in this case, it's only 23.6, means to say the underlying bias is actually very firm. So if you have to pick a token to buy, I would think this will be the best option if you decided to have a bullish view. Okay, for me, I'm not going to do anything in crypto. I already have a position that is not doing very well in Ethereum. I have shorted too early. I'm still hanging on to those Ethereum positions. So I'm not about to add on to another position. So I will have to see how things develop. So this is all I have for you. Now we are going into the eve of Chinese holiday, Chinese New Year on Saturday. So today will be the last update before we celebrate our Lunar New Year. By the time I will see you again will be on Sunday, which is on the first day of Chinese New Year. I will still be doing my webinar regardless of rain or shine. So if you are interested to attend this webinar, do remember to register for the webinar and look out for the login details in my Facebook posting. So do watch out. Okay. In the meantime, I wish all of you a great weekend ahead, and do remember Monday, January 23rd, to me is going to be crucial. I expect something big to happen. Okay. Okay, guys. I will see you, if not on Monday, then on Sunday. Bye bye. Take care.